Good evening and welcome to the latest episode of the Eve Prosper Market Show. I'm your host Lockefox and I'm here with all the market news and the very latest economic numbers just released this week. So without further ado, let's go ahead and get this show started. Again, we start where we usually do, talk about some quick show news just at the top here. If you want to catch the show live, we are live streaming on both Twitch and YouTube every week, Friday night 0400, Thursday night US time. That time may be subject to some changing in the next couple of weeks. Looks like the time change is coming up, so it should stay 8 o'clock Pacific time. It may move in-game time back to 0300. I just don't know when. Next, I want to thank our editor, Christopher Mellen, who's doing an amazing job making sure that all of you guys who enjoy the show on YouTube, who don't catch the live show and just want the news, he has been doing the work of clipping down the show and getting it into a presentable state for you guys. So do thank him when you get a chance. If you want to follow the show, all you got to remember is Eve Prosper. That'll get you to Twitch, Twitter, YouTube, and our blog. And do join our Discord. Links should be down in the doobly-doo below on how to join. We have quite a community there, and if you want to get in touch with me, that is the very best avenue to do so. And then very last, before we get started, I do want to put a big shout out to our patrons. The patrons on patreon.com/Eve Prosper do keep this show free and on the air week after week. We provide this ad-free, high-quality, data-driven, analytical review of EVE Online data, and it's really thanks to our patrons we stay on the air. So if you can give even just $1, it goes an incredibly long way in keeping this show going week over week. It keeps us in hardware, it keeps us in software licenses, it makes this show possible. If you can't support us monetarily, I completely understand. That is no problem whatsoever. Do be sure to share our link around. I do want to see subscriber numbers go up and to the right like any good economic guy. So do get subscribed on Twitch, on YouTube, on Twitter, and catch the latest news and come join our community. So with that, let's go ahead and get right into the meat of the actual show. First, again, I want to open our show with our CSM picks. Voting did just open this week, so do not forget to vote. Also, remember that with single transferable vote, that means that you should be able to vote your heart first and vote your brain second, essentially. So if there is a candidate that you absolutely positively love to death, no matter how far their chances may be, do be sure to put them in the first slot, because it's the only way they're going to have a breath of a chance. So with that, I want to go through our picks for CSM this year. First is Roden. If you would vote for me to do economics at CSM, Roden is the guy to go in my stead. He was writing for the Neocom. He's been running a loaning program that is extremely lucrative and successful. He really knows his stuff, and we support him. If you'd support me directly, you should support Roden. Number 2 in our slot is Commander A's. If you are a generalist, if you are a jack of all trades and you're looking for somebody who can cover you, who isn't just nullsec, who isn't just lowsec, who isn't just a pirate or a ganker, Commander A's is kind of our catch-all candidate. He is quite active in the community, and he has been a real asset in being able to talk with people and meet with people and really do the groundwork required to run a decent campaign. So we do support Commander A's, who is tuned in live, which doesn't hurt. And then last but not least is Erika Mizune, who, if you are in an accessibility camp, she is definitely the candidate to look at if you're looking to add more accessibility, small things to Eve. Also, she is incredibly versed in the industry mechanics and is definitely an asset on that front. So these are all very good industrial candidates. These are all good high-sec representatives, in my opinion. I think these guys all represent the sort of audience that we cultivate here at Prosper, and I encourage you to put them as high as you can on your ballot, because again, those top slots are extremely valuable, and even if it's a long shot, it's best to vote your heart first and settle for the expectation later. So with that, I'm going to go ahead and move into Plex, which before we start, I'd like to thank everybody who says they just skipped the show news to get right to the Plex. That, hi again. Do be sure to support us on our Patreon, and do be sure to join us on Discord, and do be sure to get subscribed, because that show news section is important and it's part of the show. So deal with it. With that, let's talk about Plex. So, Plex is going to be really interesting this week. It has been on the top of my mind since the economic numbers came out on Monday. And expectation I had was that we'd be still pointing down. But if we go ahead and zoom in, it's not going to be really obvious on either of these plots. But Plex has been spiking up today. It's shown some real movement in the last, 24 hours. Unfortunately, the way that these graphs get pulled is that last 24 hours can be a little bit hard to get into these candlesticks. If we zoom all the way in, we can see that we're really getting into a shortage of available Plex here on the market. So that's causing the prices to spike. Now, so this is the part I'm a little annoyed with, is that we broke out of this 105, 107 band, and then all of a sudden my mailbox is full of, Plex is on a runaway, it's spiking, oh my god, it added 100 million. Actually not even, it added 50 million. Like, we're making this big thing about just breaking out of these binds here. Again, if we zoom all the way out, we see that we still have a lot of room to go to get back into an interesting regime. So it's I get that it is, and I get that it's that we've been pretty dry on Plex news for the last couple of weeks. But like I said, what I think is driving this is that we're really starting to get into a shortage regime of not as many Plexes in the market, causing prices causing us not to have the stoppage to keep the prices down. I have a hard time. So we're going to talk about Plex in a little bit more depth when we get to the monthly economic numbers. But I have a really hard time getting on the ball and saying, well, strap in, Plex is rising, because there's some really hard headwinds to fight against in the economic numbers, and I think this is a really fragile space to be in at the moment. So we will talk about this more. I pinky swear. Zooming in on the RMT markets, again, nothing unexpected here. We're seeing skill extractors keep pace with the Plex market. We're seeing it lag a little bit more than usual. We usually see it lead. So it's down maybe 1 or 2 extra percentage points than it should be. So if you were holding on to skill extractors as a Plex hedge, I would be waiting for this weekend to see when they overshoot again, because you should be able to get like plus 2% for the ARM, essentially. Next, skill trading. We're seeing the margins start to shrink, but we're still seeing really, really healthy overall margins, where you're still making 850 a skill point, essentially, and this is still a really great margin for your skill trading Plex, your skill trading points. I mean, we're talking about we've gone from a 300-isk per skill point margin to a little less than maybe a 250-isk skill per skill point margin, which is still really generous. It's still free money. As long as we're above the dotted line here, it's free money, so there's nothing really to worry about there. I was actually kind of expecting prices to rise a little bit, to be completely honest. And with the Plex rise, if that stays sustained for more than 2 or 3 days, we should see the prices start to come out of we should see that reflected in the skill injector market. I'm having a hard time saying that we'll get to 700 million, but we're still a little bit on the short side. This is basically equilibrium. It could get a little bit higher, but I don't think this is a really great speculative opportunity in the next 10 days, essentially. Moving on to market indexes, where we're going to talk about the monthly economic numbers along with the ones we track. First, we get into the net trade. We can see the big hole that Burn Jita left in the market. Again, that is reflected in the normal market here on the red, yellow, and blue, but not in the RMT markets where things stayed completely steady. So it's interesting to see the material market contracted as hard as it did. I really didn't expect that. Usually what we've seen in the past, as I said last week, we usually see that we have enough slack in the market to basically ride out a weekend of Burn Jita. A lot of people get their shit kicked in on, the first day or the second day, but then everybody just stays home for the weekend. And what we ended up seeing was a much more successful than average Burn Jita, where there wasn't a lot of slack in the market to pull, and we'll get into exactly why here in a couple of slides. But we are back to regular levels, if even just a little bit higher in this post Burn Jita regime, because we're seeing the pent-up supply come rushing back into the market. So we'll be watching that over this week. Looking at total destruction, again, we can see just how productive it was to be in Burn Jita. We saw 1.5 trillion ISK destroyed that weekend. Not all by goons, of course. I think they can count like 20% of that. And we're back to almost regular levels. We're a little bit weak coming into the weekend, so that's a little bit weird to be expected. I was expecting this number to be just slightly higher, like 1 or 2% higher. So this is a little concerning going into March. But let's go ahead and start talking monthly economic numbers, because that's the thing I really want to talk about. So, back in October, I had said that the mining changes were going to cause a liquidity squeeze. And a bunch of people just sort of looked at me with blank expressions, being like, the fuck you mean liquidity squeeze? And the reason I said this was because if you're ratting, you are generating ISK. That is an ISK fountain. You might as well be printing ISK straight off the printer right into the economy. So there's ISK fountains like ratting, and there's ISK sinks like taxes, right? So you're printing money into the system. So let's say that mining becomes valuable as a nullsec activity. Let's say instead of putting the effort into ratting, you can mine 60 or 70% of the ISK per hour and have half or a quarter of the risk, thanks to the panic button and thanks to using cheaper ships and all the mechanical changes that were coming in Ascension. What that means is that now you've changed your income stream from a ISK printing operation to a ISK neutral operation, where you are relying on someone else to have the cash on hand to pay you. This is fine. There's nothing wrong with cash neutral operations. That's part of the economy. Every industrialist is essentially running a cash neutral operation. So that I expected to cause a liquidity squeeze. Now, and by liquidity, I mean cash ISK on hand. That's exactly what we're looking at here on the top graph. Number of ISK available to spend out here in the world. So, as people move from ratting into mining, we see that their income stream becomes neutral. In fact, it's very slightly negative thanks to taxes and trading and other fees that come along with trading. And that means that to pay me, you need to find somebody who has the cash already. It doesn't need to print the cash. And so that means the cash is going to end up getting slightly burned out, if that's fair enough to say. And I think we're finally starting to see that, where we were extremely strong in December and January when we couldn't get enough of the Rorqual drones to get people actually mining. And then we saw huge pushes in February up to the dev blog that was released, not the dev blog, there was a forum post by Fozzie explaining the changes. Up until there, we saw a just incredible number of Rorquals come online to continue mining. And that is fine, except if you're a high-sec miner, then that's really not fine. Your wages went through the toilet. But it means that you're not ratting. You're not generating cash for your time. You're generating material for your time. And we're starting to see that liquidity start to get squeezed. Now, I don't think we're anywhere in danger territory. I think we could fall down to the 900 trillion mark and still be perfectly fine. I don't think everyone would be happy with that. What is acceptable to players and what is acceptable for the economy to handle are two different things. I think there might be riots if we got down to 900 trillion in liquidity, but I think that there's still room to pull cash out of the system. And then the other part of the problem is that we're seeing extremely high ISK velocities, where we're seeing about 80% of the cash generated getting spent, which is, again, totally fine. This is a high tide rises all boats kind of thing. It puts a lot of activity into the market for trading, for industry, for all of the other economic operations. So that means that the engine's running very, very hot. But again, a hot system can go unstable the fastest, right? If we're seeing a lot of cash get printed into the game and we're not chewing it up fast enough, we could very quickly see this whole thing turn around. So if we go look at the total sinks and faucets, we see another record month for faucets coming out, especially on the backs of ratting. So people are still generating ratting income. We're just generating more material income instead. And the sinks are just where we expect them to be, so nothing huge there. And the activist delta last month was nothing too horrendous. I'm still wondering why the January numbers were as hot as they were. Like, that either means a lot of cancellations or a really big ban wave, and I really have a hard time figuring out which. And the production graphs are still again outstanding, and we can see really this. I'd like to think that this entire thing from December to February was basically was mostly building new Rorquals and supers thanks to the new mining numbers. And it looks like the mining drone bug might have been fixed finally, which is good. And we just see extreme efficiency in the mining fields. So, again, we're seeing much more production than destruction. So we're going to start getting into a place where margins are going to start suffering. So all of you industrialists out there, this is unfortunately bad news, because you have a lot of productivity and a lot of material getting generated and not as much business of it going off the shelves. So it's going to be a hard time to be an industrialist, unfortunately. But I still think that we're in a perfectly acceptable economy as we look at it right now. And then last, to go back to Plex, I kind of want to zoom back out and talk about Plex. The problem I have is that, so the theory I've been working under for Plex for the last 6 months or more has been that Plex is the cash sponge. When we have extra cash in the system, it gets socked into Plex. Plex prices rise. When we need cash out of the system for wars or citadels or new markets come available, it gets squeezed out of Plex into those new markets. So this is sort of a inflation deflation. It's more of a capacitive sort of operation. And what I expect with how high the ISK velocities are and how we are seeing cash on hand start to drop, I have to say that looks like downward Plex momentum. Now, of course, that makes me wrong today. It makes me wrong here on this show right now, because the market's doing exactly the opposite. But we know that that's because of a local shortage where there just aren't enough Plex on the market. And this might be a sign of not enough new dollars coming into the game, not enough new Plex being generated. I have a hard time saying that after CCP released that they've had the most successful year in their history this last year. Like everyone there seems to be drinking champagne about how great Ascension has been. So I have a hard time believing that that's really going to stay around, but we might see things get a little rocky in the next 2 weeks as this supply shortage plays out. But I still got to say, until the numbers turn around, that down is the direction I expect. And actually, what really has me worried is that we would see people. Let me see if I can explain this. What we see is that we're in an ISK making regime right now. We're in a time where everybody is just making hay while the sun shines, putting that money away, building the ships, building their armies, building their stock reserves, and just making money hand over fist. And the problem is that if war breaks out, then we're sitting on a powder keg where the liquidity could really become a problem once the gears of war start turning. And I expect that to get fixed reasonably quickly. I expect Plex to come out of reserve and get pushed into the market, and I expect there to be plenty of cash to actually do the business that needs to be done. But I am a little worried that we might see a cash shock if the moon changes come out and a big buy-in starts to happen, or if people are going to start mobilizing to go take new spaces because the new resource curses are going to get reshuffled. We're in a fragile spot where news could make the Plex market do some really funny things, and I have a really hard time predicting it, unfortunately. With that, let's go ahead and go on to minerals. I know I've spent 30 minutes so far, holy cow, talking about what I think of the monthly economic numbers. Let's start where we do, way at the bottom, down in titanium. Prices are steady at 4.0. So what I expected last week was through the weekend to see a more pronounced dip in prices as more material came in once the space lanes were open. We're still seeing quite a bit of shortage where if you're watching particularly closely, we might get up to 4.5 in a quick spike, given how much material is leaving the market at the moment. It's a risky bet, and I don't think that novice traders should be jumping into the titanium market, because that is a big market that you need some really high skills to really play in. But I'm sort of expecting this weekend to see freighters coming to market. They may have been staying home last week about the sort of expecting Bernjita to keep going. The news has been kind of flaky on, are they fighting? Are they not going to fight? What's going on? Also, do keep in mind, that Alone IQ is pointing out in the Twitch chat that we should be seeing the March patch come out and Rourke yields will be nerfed. So technically you should think that that means an up in mineral prices, but I think that we are in such a saturation point of minerals that it will take a few weeks for those nerfs to actually wash through the system. So we'll keep an eye on it. I could be totally wrong. Again, I was wrong about how much slack was in the system. It's just that minerals are heavy, and I still expect a lot of Rorks doing their work. So we'll see. Pyrite was in the dumps last week, is now up at 6.0. Again, similar story, but we're seeing a big surge in supply, which means that I think we'll be at 5.5 over the weekend. This one's actually not a bad one to stockpile on. If you were a industrialist, I would be putting in some opportunistic buy orders in the 5.5 region, looking to snatch up some cheap pyrite as we may crash through a floor coming into the weekend, something in a 5.5, 5.4. We should be back to 6.0 we might be to 6.0, 6.5 once the patch hits. So I think this is in a pretty decent spot to do a little bit of speculation. I wouldn't put a ton of money on it. It's a risky thing. Again, the low end minerals require you to have maxed out skills to avoid taxes. It's really easy to lose your lunch on the fees here. But I think that playing a 5.5 and buying it at a 5.5 and looking to sell at a 6.5 is definitely not a bad play, especially if you're going to go use it to build things. Stocking up a couple extra units of cheap pyrite could basically just give you a little extra amp on your margin next week. Mexilon is, again, our darling. It was down to 70 last week and up to 75 this week. Did exactly the opposite thing I expected. And we can see exactly why. Where supplies were going up, I expected them to keep going up. And instead, we saw big buyouts instead. This is really the high sec mineral. If you guys can mine it, it's really the best thing to be mining as a high secker. But the prices are extremely high right now, and actually we're in such a shortage at the moment that we could see it pop over 85. If you're not already in the market, I have a hard time telling you to jump in now. It's probably a little bit too late. But if you are holding it and you're watching the show right now into the weekend, getting out at 80, getting out at 85 are some pretty decent margins given the circumstances. I would watch this really carefully. We're in a spot where it could really rubber band hard and do a double dip here. So there's definitely risk here. It's a risky bet. But if you're already in and you've got in at the 70 or under 70 and you can sell at 80 or more, take that money and run, man. It's a good sell. I expect this to be back up again after the patch as well, but I don't know if we'll be back up at 85. I can tell you 75 should be fine, but 85 is a really hard number to hit from where we're standing right now. We're basically just praying for the market to be bought out. Jump in when things get voided out, make a bunch of extra money, and then get out before the rest of the supply chain gets there. So you have 12 hours essentially from this show. So sorry, Europeans. Next, Isogen. I'm eating a little bit of crow on that I keep expecting it to go down, and it was going down, and then it popped back up thanks to Burn Jita, and now it's going down again. We can see the supply is a little bit lean, so I don't know if we'll go all the way back down to 45. But again, I still think Isogen's a loser. I have a really hard time jumping on this one because it's problematic. There's still a lot. It's still a very easy mineral to supply, and it just isn't demanded in the same amount that it's supplied. So it's hard to have a really positive opinion about more Isogen. Next, Noxium was down to 300. Now it's back up to 320. This looks really dramatic, but again, it's only 20-esque. supplies are a little bit short, so we're in a spot where we could see some positive action this weekend, but there's also not a lot of room to play the buy orders at the moment, because if you could sneak in like a 299, I would be buying in, but like this is going to go up to 310, and then we're probably going to jump up to 340, something in that range over the weekend. And yeah, I would love to jump in on this, but there's just not the space here on the buy orders to really justify jumping in. Zydrene, long time fans of the show will know how much I hate Zydrene. So we saw it down, and now it's even up more than expected. I think this price spike does not go along with the fact that there is just so much in supply at the moment. Again, we should expect supplies to back off slightly thanks to the Rourke change, but the changes that are coming down the pipe still expect to see wormholes generating a lot of this stuff for ISK per hour. I still expect to see Rourke's getting the chance to mine a lot of this stuff, even with the range changes. I don't think the range changes are coming this month. And it's still really easy to generate a lot of Zydrene for not a lot of effort. And so I think we'll stay at 1K. We might be able to sneak up to 1.1. I mean, it's not a bad bet to do, given the spot. Like if you can get a 990, a 950, maybe if you're playing from a Citadel, the chance to jump in and aim for 1.1 is not bad. Like you could probably hit it by FanFest, but it's risky. It's not a terrible play. I hate Zydrene, so that might be my overriding factor here. Next, Megasites, similar story to Zydrene. These two tend to move directly together. Again, we were up and now it's down. We can see this is actually driving a little more like we expect thanks to the proposed changes. Supplies are tapering off slightly. Again, putting us... If supplies really take a dive on patch day, we might be able to see a 1.5. But again, that's a much harder target to hit than the one on Zydrene. I think that the chance to get there on Zydrene is much higher than it is on Megasite. And I still think that we will be oversupplied in Megasite even with the nerf to yields that's coming out. And then last, Morphite. I expected this one a little bit different. We are seeing a supply glut, so I'd be watching for a sub 9K buy order, maybe an 8.5 if you're particularly ballsy. Looks like we're going to be supplied over 10 million units, which means the price should come down pretty decently. Again, longtime fans will know that this is a personal favorite place to invest for me, because we tend to see it below 10K as a chance to buy and above 10K as a chance to sell. My one worry is that I have a hard time balancing exactly how much I hold. It's very easy for me to hold way more Morphite than is really healthy and be sitting here waiting like, come on, go to war. I need you to go to war so I can get paid. So this one takes a lot more patience than I usually have. But a chance to buy in this weekend is, I think, coming up. Again, something in a sub 9 is where I'd put my buy order and just trickle in a few units that you can get on an opportunistic buy order. Next, fuel. Moving on to fuel. Still have this bug because I suck and I haven't figured out how to fix it yet. We're still seeing the same spread we've been seeing week over week. Galente ice is staying steady. Caldari ice is staying steady. We're seeing falls in the Minmatar and Amar fuels. Again, no big deal. Not a lot to talk about here. The fuel block, again, ignore this last bit, is much more interesting. We saw a buyout on the nitrogen fuel blocks going into the weekend. So this one is particularly weird I have opinions about the fuel block costs and where we're going in the next up until FanFest. So there were leaks this last week that the new mining outpost changes that are proposed are really bad news if you are a moon miner or a moon reactor. Because they're basically saying the moon reaction chaining sucks, and we're just going to drop it for traditional industry. And that means that there's a lot of POSs out there doing work that are going to go offline as soon as the new structures show up. And everyone's going to go transition over to blueprints. And I kind of hate this proposal because it doesn't give a lot of space for, it kills an industry, right? Like, it kills the low attention, high tool investment, which again is another piece of Eve mechanics that I love and just CCP seems to hate, is the expensive industry equipment, ECs notwithstanding. And to have that go away without a replacement, without some other sort of space chemi mechanic, kind of pisses me off. And it means that we see a huge chunk of the fuel load just evaporate if that change comes out as is, no changes. Again, it's just rumor mill right now. It was, a fake out on the RSS feeds. So this could be Trump care all over again, where JK, we didn't mean it that time, we totally mean it this time, kind of thing. But I'm not liking the changes that I've heard so far. It's still not looking like we're changing the resource curse in any way. So it doesn't look like it's going to be a real conflict driver. I'm pretty disappointed in the leaks I've been seeing. So we're going to keep an eye on this. If you are speculating in fuel blocks, I would get out of it. In a case like this, you have a 50-50 chance of making a killing or getting killed. And frankly, you gotta balance out pain at like a 4x factor compared to pleasure. So I think that the pain factor on this is just so high that I would jump out of fuel blocks given the headwinds. I think it's going to be tempting to keep producing while the sun is up. Like right now, there's actually some really great production margin we're seeing. We're finally seeing production margin return after it's been so crappy for the last while. Looks like a lot of producers may have gone quiet over the Bernjita thing, but like, I think this is a trap. Go ahead and jump in this week and next, but as soon as that dev blog comes out, I think this is going down through the floor. And you're going to be holding, I would run this super lean. Basically, take whatever fuel blocks you produce that day, sell them in Jita, put in the next load, sell that load, and try your damnedest not to have an ounce of oversupply, and turn it around as fast as you possibly can so that when the bottom drops out, you're not holding anything and you just get to enjoy all of the fruits and none of the pain. Zooming in again, we see nitrogen fuel blocks. Again, we saw the market basically get bought out, causing this spike here. And we're seeing supplies come reaching back up. This should drive the prices down. Not that my scales are completely fucked up. Strontium is next. This is our canary in the coal mine for SOV warfare. Nothing much to say. We keep seeing supplies rise thanks to Rorqual's ice mining. So nothing really to see here. I wouldn't even buy in yet. It's tempting here to maybe put something in a sub 7 buy order, but unless you really need Stront, I wouldn't be buying it. And then heavy water, we were seeing, so this is the one we're seeing the biggest turnaround on, thanks to the the forum post, is that boosting looks like it's turning around. The supply buyout basically stopped, and now we're seeing material stacking up. So I think we're going to see heavy water take a dive in the next short while. Next, outliers. Let's talk about outliers. Start where we usually do in the advanced materials coming off of moons. So as Commander A's pointed out last week, we've been seeing a lot of action in the R16s, which I don't directly track because they get fuzzy. But we're also seeing some promising signs in neodymium and a big drop in dysprosium. So these are the ones I'm personally watching going into the proposed changes because, again, it kind of looks like we're going to... It's hard to believe that we'd be seeing less of these materials hitting the market, even though I think we could cut 25% out and not hurt. But we are seeing a lot of instability in the Tech 2 supply market, where ferrogel is on the rise, and I think this is going to pop actually really soon. Fermionic condensates could also be falling. Nanotransistors was going up, and I think it has some more room to grow given signals in neodymium. Nonlinear metamaterials are up. Those are for Mar ships, which is weird because I didn't see anything particularly Mar in my passover of the things, so not sure what that's going on. And otherwise, things are staying relatively where we expect them. I kind of expect the middle to go up a little bit here in hypersynaptic fibers is a buying opportunity if you're, again, risky. And I think the highs are going to come down from where they are. So if you're holding ferrogel and fermionic condensates, you might be able to buy more ferrogel, but I think those two are going down in the next 2 weeks. Again, dysprosium, we're seeing a big glut of supply. This could be a dump after somebody's switching moons, essentially, where a group rolls in, they take a few moons, and whoever was holding it dumps the supply overflow they had. This looks regular, in my opinion, so the prices are way down at the moment. I think that you could buy in dysprosium, but going into this uncertain space, I would be really hard pressed to want to jump on this train. Neodymium, we're seeing a supply shortage where it looks like some supply was cut out or bought out, and prices are rising. I think we're going to top out at 22, 23K, so I don't think there's a lot to say here. But expect that to jump up through nanotransistors and I want to say hypersynaptic fibers, but I'm probably wrong. Next, PI4. This, I think, is your best place to be betting on the drilling platforms. We saw most of them pointing down the last couple of weeks, and I told you guys to go buy them. And it looks like people are finally taking that advice. Nanofactories have turned around. Broadcast nodes have turned around. I think this weekend's your last chance to lock it in and look really smart. And if you're going to make your bets, I would make them now, because as soon as the drilling platform dev blogs start coming out, I think this market's going to get a lot more interesting. I don't think you're going to make just gobs of cash like Citadel, but I think you'll make enough to justify holding this stuff for 8 to 12 weeks. All right, moving out of those markets, let's talk about robotics, which has been on an absolute tear the last few weeks. Again, I'm going to blame this on the extremely productive Goon reaction farming. They have been hard and fast at getting reaction farms going, and they've been really driving the Caldari fuel consumption lately, and I think that robotics has had a hard time keeping up given what's going on. It's peaking out at the moment, so if you're not already in robotics, I would not be changing your planets to go do it. I just find it interesting that we've added 20% to the price in the last 2 weeks, and only now did it trigger my analysis. So we'll see. Another one on the rebalancing block is T3 Cruisers. I heard murmurs about the Tengu, but I haven't seen any details about them yet. This would be a decent chance to be speculating here. I'd be really careful about the Tech 3 material markets, given the way they are right now, and given the chances that things will get much cheaper. But you have the opportunity, for instance, on the Loki right now, and maybe the Legion, and maybe the Tengu if you're timing things correct, to play some of these bounces as proposals come out and the theory crafters pick new ships. You might be able to get in before the prices drop thanks to the drilling platforms. Next, big dive in Ishtars this week. Supply chains are very hot. It looks like there is just more suppliers than actual buyers at the moment, and we've seen a basic doubling in supply at the moment. Not sure what exactly is going on. I have a hard time believing that the Isktar has really fallen out of vogue that hard, because I don't think that people can jump into Rorks and ratting carriers this fast. Like that's a really fast turnaround, given the way things go. And I'm wondering why there's just so much extra supply, because it just looks like the demand has stopped, and we're not seeing any indications that Strontium leading a deployment. So it's not like a bunch of people went home and just stopped ratting. So this is weird, given the circumstances. Moving on to rigs at the moment, medium Trimark armor pump 2s here have almost doubled in price. Not exactly sure what's going on specifically. The market volume is a little bit up given the circumstances, but not enough to really drive this. And when I went through the material markets for this, they didn't look particularly interesting. So I don't know. If you can jump on them, I'd be selling, but I kind of expect this bubble to pop over the weekend, or it may have already done so before I got on the air. Next, sabers are still hot. So I talked about these last week. We're not seeing the engagements that we'd expect to see a lot of sabers dying on. There have been some onesie twosie operations where, two parties are sort of just kicking at each other without going into all out war. But we are seeing the prices spike, which is just strange. It looks like we just might be missing 2 or 3 producers from the market. I have a hard time telling anyone to change into this market, because these sort of spikes, it's really easy to say 1, 2, 3 as a pattern, and then get completely screwed. So I would be really careful, but it might not be a bad chance to make a couple of cheap ones. You got to wait until I think the metamaterials were hot, but jump in and aim for what's that, a 60 million sort of price tag. Next, the Lachesis, again, really hot. This is a really thin market, though. So, again, my warning here is that if you're a producer and you see the Lachesis numbers, don't jump on it. You're going to see a crash come over the weekend as the supply chain gets doubled, and the prices are going to fall through the floor, and there might be a chance to buy up a couple of the extra cheap ones, but this is not the chance to jump in. Warning, don't do it. Looks like there's just a weird buyout, and what usually happens is that everyone looks at their spreadsheets and goes, wow, Jesus, I can make so much money, and then they jump all in, and then it crashes. So avoid it. All right, moving on to our prediction review. I think we only have one this week where we talk about jump freighters. Again, we expect the Anshar one, thanks to Burn Jita. A bunch of Anshars did die, and looks like a bunch of people had to go buy them, which my heart goes out to you. That is a big loss to be cashing out 8 billion-esque, thanks to losing your jump freighter. I feel you, man. That completely blows. I've been there. It's not fun. I understand. The thing I find interesting is we see such a big buyout in Anshars, basically adding $1.5 billion to the price, and not a similar move in Reyes, which are technically slightly bigger. They're not bigger by much, and I understand why a bunch of people have Anshars, but I thought that Reyes were more popular than they are. So a little bit weird that we don't see the billion-esque premium here on Reyes instead. And last, but certainly not least, let's get into the violence report. Start with our active ships. Nothing incredibly interesting this week. We're still seeing the Tengu and Vexor Navy issue leading the counts. We're seeing a lot of Rorks dying, which is great to see. We didn't see jump freighters jump into this, so it makes me wonder if I've got a bug. Like, we should be seeing Anshar on here still, but bugs are bugs. Next, active systems. We see GE Tech 8. Thank you, everybody who pointed out that was Brave and I think PL kicking each other's shit. Not a lot to report this week, unfortunately. And similar for the regional report, we saw some action out in Catch, but we're not seeing, and it looks like some big stuff died in Catch, probably some Citadels, but we're not seeing a lot of action this week. So I'm hoping we start to turn that around and get a little bit more action coming into the spring, because things are getting a little too quiet for my liking, especially how industrially productive we are. We're going to have a real hard time for industrialists to get the margin that they need to keep working. So we'll see. And with that, I'm going to go ahead and end the show here. I want to thank everybody who tuned in live. We had a great turnout this week. Looks like a little over 50. Wow. Quite a turnout this week. If you want to tune in live, you can do so on both YouTube and Twitch at 0400 Friday nights and Eve, Thursday night US time. We are here every week. If you want to get in touch with us, the very best way to do so is join our Discord. Link should be down in the doobly-doo below. And if you want to support us, if you enjoy what we do, what this show does, giving data-centered economic reporting, that takes a lot of work from me. It's a lot of work to keep the tools up to date and develop new tools, and we can do it thanks to our patrons. They keep this show ad-free every week and keep us in software and hardware, and even $1 goes a very long way here. If you can't support us directly, I completely understand. That is absolutely no problem at all. Do get subscribed, and do share the link with your friends. Like every good industrialist, I like seeing numbers going up and to the right. I want to thank everybody who tuned in live, and I want to thank the community team that didn't nerf the monthly economic numbers. Thanks again, Dirk, for reminding me to do that. Also, if you're tuned in on YouTube, do thank Christopher Mellen for the edit, because he has been doing some amazing work. It's been great to have the help getting the show produced in a high quality for you guys every week. With that, I'm going to go end the show here. I have been your host, Lockefox. This has been the Eve Prosper Market Show. We will be back next week with more market news, and see you guys on the next show.